quite close to some really critical levels on Bitcoin, and that is on a day or on a week where the US markets are closed or not opening for business today, not opening for trading today, and one of the biggest news weeks for Bitcoin. We're going to look at all the news that's coming out this week for Bitcoin and how we think it's going to affect the markets. So it's going to be a big show. Stay tuned until the end because that's when the juicy story is coming. Let's do this.
Crypto Banter, this is Crypto Banter, this is Crypto Banter. Crypto Banter for you, this is Crypto Banter, this is Crypto Banter, this is Crypto Banter. Crypto Banter for you, smash those likes. Smash those likes. Crypto Banter for you, smash those likes, smash those likes. Crypto Banter for you, smash those likes, smash those likes. Crypto Banter for you.
Smash those likes. That's exactly what you need to be doing right now. Smash those likes. Subscribe to the channel. Give us some love because we're here in the bull market. We're here in the bear market. As hard as it is to make content on the days when Bitcoin's going down, we're here. We're here every single day, all 65 of us, bringing you crypto love and crypto wisdom and making sure that we get through this bear cycle together. And I don't know if you guys saw my Instagram post earlier, but I said, fuck, I hate these bear cycles. Wow, hate them. My motivation levels go from like here to here. But this is the time when we should be doing stuff, and let's talk about that stuff today. All right, welcome back, guys. Here we are, 37,000, 38,000, and Bitcoin is just testing that trend line now. It's a pretty critical level because if Bitcoin goes below this trend line over here, then it could mean that this entire breakout has been invalidated and we're going back into the downward trend. That's what it could mean. So it is critical that Bitcoin does something right about now. Like any time now would be an amazing time for Bitcoin to do something. So to get that done, I think what we should do is just quickly pause the show and just do what needs to be done. Okay, is the music much louder than my voice? Is it better now? Can you guys hear me? 1 2 1 2 1 2. Can you hear me?
Yes.
Is it fine? Can you hear me properly? Okay, amazing. All right, so Bitcoin is now hitting these absolutely critical levels. It is bouncing right now as we speak. It was at about 37,500. It's now back at like 38,500, and it is staging a bit of a comeback. But ultimately, it's super important that we hold up above this line. And it's doing this on a day where the US markets are closed. So the US is closed for a bank holiday, and the US markets are closed. But at the same time, the US futures are down about 0.3%. So not really very much going on the US stock markets, other than the fact that they're closed today. But Bitcoin getting hit pretty hard and pretty much having a very rough weekend on the back of the Russia-Ukraine tensions. This week's also a very big news week for Bitcoin. It's a massive news week for Bitcoin. There's a whole lot of news that can drive the Bitcoin prices. That's what we're going to be talking about today. Also, what should you be doing right now with your portfolios? It does feel like every time we buy the dip, it gets lower and lower. What is the right strategy? What should we be doing? How do you protect yourself in these types of times, in these kind of markets? That's what we're going to be talking about today. But before that, to our new subscribers, subscribe to the channel, like this content. We do bring you 4 streams every single day in the bull market and in the bear market. We have this show, Fundamentals. After the show, we have a gaming show. We have a DeFi show in the morning for those of you who want to make money, make yield on your coins. And that's really what they're saying. The mic is still low. Let me try and get the mic level up for you guys. Hold on a second. Let's try and get the mic level up. That should be way better. All right, there we go. Way better. That sounds amazing. It also sounds amazing in my ear. I've got quite a soothing voice, actually. That's the word. The markets are going to be going down. No. So, all right. Before we get into the news, subscribe to our channel. You all do hear me. Let's talk about this debate that's happening on, I think it's Wednesday night. Is it Wednesday night where this debate is happening? This is like the ultimate debate. It's the debate between Peter Schiff and Richard Hart. Whoa. This is going to be an insane debate. February 23rd. I think it's free, right? It's free to do it.
I think so, yeah. Yeah. I don't think Richard would charge.
I see Peter Schiff he's been bantering, he's been poking Richard Hart, saying Hex is a cryptocurrency based on proof of weight, where suckers are rewarded for locking up their tokens, so those who got in early can cash out. The only ones who benefit from the weight are those who don't. In the end, those who do will be left holding the bag of worthless Hex tokens. We can see that right here. Right here. We have Kyle. Are you holding Hex?
Yeah, I have a bit of Hex. It's my only 100x that's on the open market.
How long do you need to wait to claim that?
No, I can claim it now. I've already got the 100x. It's been in 1 year. So I'm a Richard Hart fanboy, yeah.
Cringy. It's gonna be juicy. It's gonna be juicy.
I'm into 100x. 100x in a
This ends badly. This ends badly. This ends badly. No, I am a Richard Hart fan. Anyway, I want to see what happens in that debate. I've got a feeling that it's going to be quite a heated debate. Anyway, let's move on with the show. Because we just have to move on with the show. Alrighty, so big week for Bitcoin. Why is it such a big week for Bitcoin? Well, we got this week, apparently, if the rumors are true, I don't know if the rumors are true, but there is this Joe Biden executive order around crypto regulation this week. Now, I mean, no one knows if it's true, and no one knows if the regulation is going to be good or bad, but that is one part of what's happening this week. And I guess the other part of what's happening this week is the Russia-Ukraine showdown, or this Russia-Ukraine tensions, which are happening at the moment. That's happening this week. And it's happening on the week where we've got an options closeout. So we know that on the last Friday of every month, we get the biggest options closeout of the month. This week, we have the options closeout, and the point of max pain, which is usually where prices tend to on the options week. On Friday, that point of max pain was 41,000. Now, I say this on Friday because in times like this, where you have a lot of political instability and you have a lot of volatility, the point of max pain can move as people buy protection, as people buy and sell protection against assets. And what we're looking at now is we're looking at the big story in the news being the Russia-Ukraine sentiment. And what would happen is that a lot of funds, individuals would want to hedge their bets against an attack happening by Russia against Ukraine. To do that, what they usually do is they take out a whole lot of puts at different levels. So they could take out a whole lot of puts at different levels. And if you look here, let me actually show you one of those examples of what these puts would look like. I'll show you on this thing here. You see, people can take out you can buy a whole lot of puts at 39,000, which would effectively give you the right to sell if the price goes under $39,000. So this week we can expect a lot of options action between now and Friday, between now and the big options closeout this week. So expect a lot of volatility. Right now, as it stands, as at Friday's close, the point of max pain was at 41,000. So we can expect, if nothing else changes, we can expect the price to tend more towards the 41,000, which kind of makes sense because Bitcoin has been a little bit oversold. We saw Bitcoin going down to like 37,000, and you can see now already it's starting to recover. And this is on a day when the US markets are closed. So the US markets are closed, and so Bitcoin's kind of stuck as this barometer for sentiment. So as sentiment got bad over the weekend, Bitcoin absorbed all the bad sentiment. And then on Sunday, Macron went and spoke to Putin because the US obviously couldn't broker peace there. So Macron went and spoke to Putin, and what they've now announced is that they're going to hold a summit, what do they call it when you have a threesome? Like when there's, what's a nice word for a threesome? like when there's three leaders, tripartite, they're having a tri summit. Basically, it's a threesome, but in summits. So they are saying Biden has agreed to meet with Putin, but only under one condition, and that condition is that there's no invasion of Ukraine. What we did see today is we have heard that, I mean, from reputable sources, that the Russian forces Putin has already ordered the Russian forces to invade Ukraine. That's, of course, coming from Western press. We've also heard from FNT, so from the Financial Times. We've heard that Moscow claims that it's killed 5 Ukrainian troops that actually went into Russian territory. So already we see that there is some escalation in that part of the world. So there's this, they call this I've got to get the word, it's not a threesome, it's a different word.
Alliance.
Yeah, it's a tri-alliance. It's like a meeting between 3 leaders. It's going to be Emmanuel Macron, it's going to be Putin, and it's going to be Joe Biden. And they're going to meet and they're going to try and resolve tensions. And tentatively, we're hearing that this may take place on the 24th of February, which is, 3-4 days from now? 24th of February is 3 days from now. So that's really what everybody's waiting for. Everyone's waiting for the outcome of this meeting. But this meeting's only going to take place if Russia doesn't invade Ukraine in the interim. That's what President Biden has said. He said he's agreed to meet, but only if Russia doesn't invade Ukraine. What we can see, though, trilateral talks. That's what it is. It's trilateral talks. It's not a threesome. It's completely different. What we can see is that whatever is happening at the moment isn't doing very well for the Russian stock market. So this is the Russian stock market. It's called the Moscow Exchange. And you can see that since these tensions started around about November, so this is where the tensions really, the tensions really started. If you look at the Russian stock market is down about 35, maybe even 40% since these tensions with Ukraine started. So all this tension isn't doing the Russian stock market and the Russian economy any good. And the Russian stock market is a reflection of what is already a pretty bad economy in Russia, At the same time, it's not doing any good for the Russian ruble. It's not doing any good for the Russian ruble. If you look at the Russian ruble versus the US dollar, that's down about 10% again since these tensions started. So all in all, this is not a very good bet for Russia. This is not a very good time for Russia. And I think that probably what Putin was trying to do was bring the US and NATO to the negotiating table. And he's trying to protect the borders between Russia and a NATO country. And that's what this whole thing is probably about. Or this is what the reports are that this is all about. So that's what's happening on the Russia-Ukraine front. Big week. That's what's going on. And I guess no one can tell you exactly what's going on because there's so many biases in the press. We're just going to have to wait and see what comes up in the next couple of days. The main thing to remember, though, is that markets here are forward-looking. Markets aren't looking at what's happening now. They're looking at what's going to happen going ahead. And all the Russia-Ukraine tensions are already priced into the market. They're already priced into the market. Maybe not the full extent of a Russia-Ukraine invasion, but certainly to a greater or less extent, an attack is already priced into the market. And that's the important thing to note, that if you're trading now because you're worried that Russia is going to invade Ukraine, well, you kind of missed that boat. You've kind of missed that boat. Because usually what happens is all the news that's out there is already priced into the market. So what I found here was I found a list of panics. They call it panic stations. And I looked at the impact on the Dow Jones. So this is a list of different events that could cause panic. And it kind of analyzes every single big impact event and how it impacted. How long did it take for the market to hit its lows? What happened 3 months after? And what happened 6 months after? Now, really what you can see here is from the time that most of these happened, it was a number of days before the market hit its lows. Even when you talk about COVID, from the time that we announced COVID until, from the time that the world closed down until the market hit its lows, it was only 23 days for the market to hit its lows. And the 3 months preceding those 23, or the 3 months after those 23 days, the market went up 44%. In terms of the Japanese tsunami, the market hit a low 4 days after the event, But then the 3 months afterwards, the market went up again. And you can see that for every single event, the market responds pretty quickly and usually recovers very quickly. And the shocks are quick, but the recoveries are very quick. So if this does happen, if this does turn out to be a fully fledged attack, then what you can see is that the market will probably take a few days to go down to its lows, but then the markets usually recover very quickly. Within 3 months, all of the events here, barring 1, which was the US bombed Libya, 2, which was when Nixon resigned, and 3, the Pearl Harbor attack, every single one of these events shows that the market recovered 3 months after the event, which means that by the time the market reacts, it's too late. By the time the market reacts, it's too late. What we've witnessed is we've witnessed the price of Bitcoin go down from about here all the way down to here on 2 bits of news. One bit of news was the inflation cycle. The other bit of news was the Russia-Ukraine tensions. And you can see that more or less a month after the event started, so did Bitcoin start moving down. So all this news is already priced into the market, and you can kind of see that from here to here was priced in on the market. The Russian stock market went down exactly the same amount. So that's pretty much showing you that. The other bit of information that I wanted to show you was what happens if there is an attack? What happens if there is an attack? So the best way to look at it is to go back to history and say, okay, when were the last times that there were attacks, and what happened if there is an attack? And the news here, again, is unbelievable. The data is unbelievable, because what you realize here is that 5 out of 5 times that there was an attack, the market bottomed exactly when the attack actually happened. So it's almost like the market was waiting for something to happen, but when the invasion happens, the market is always at a bottom 5 out of 5 times. In the Vietnam War, in the Gulf War, in the Afghanistan War, in the Iraq War, and in the Crimean crisis, every single time that the attack has happened, that's been the bottom. So there was a bottom over here, there was a bottom over here, there was a bottom here in the Vietnam War, there was a bottom here in the Gulf War. The Afghanistan War there was a bottom, it went up again, but then it went down again. I'm not sure what the reason is why it carried on going down. So it does feel like the news is already priced into the market, and if an attack does happen, it will almost be like the increase in interest rates. It will almost be like the increase in interest rates. When that happens, it's like, okay, we got the increase in interest rates. Now let's continue and let the market carry on doing what the market's supposed to be doing. So that's pretty much where it is. I saw this tweet here from Lex Moskovski. Lex Moskovski says, my current set of beliefs that the market is wrong and this downturn in crypto will survive the next 2 to 5 months. Crypto is overreacting and has already priced in a pretty dark scenario. Lower levels are definitely on the table, but absolutely not guaranteed. Compounding and DCA, dollar cost averaging, is now really the recipe for the win. So I think he's right. I think the crypto market has been hit much harder than normal markets. And I think the crypto market is overreacting. We saw that this weekend. And this may not be a bottom. This may not be the very bottom. But I think that that's where the trick is. I think that there's 2 classes of investors. And this is where we're going to separate the boys from the men. There's 2 classes of investors. There are investors who buy in when it's comfortable. There are investors who buy in when it's super comfortable. And they are usually the people that catch this part of the cycle over here. They buy in over here, they catch this part of the cycle, they hold on because they think they're geniuses, and they ride the bicycle all the way down. And then there are another bunch of investors who are experts in evaluating risk versus return. And if you take a trade, if you're going to make an investment, ultimately the investors who can place the best risk versus return bet on the table are the investors that usually win. So that class of investor is the class of investor that lands up making most of the money. The investors that know how to place their bets on good or asymmetrical risk-return bets. And that's really what I wanted to show you. I saw it in an amazing tweet. And the tweet says, the mathematical risk-reward of selling here is horrible. The emotion risk-reward of selling here could be huge. Let me explain. Good trades have asymmetry. The reward, if you should win, should be many times the multiple you risk of losing. For example, if you buy ETH at 2K and you think it's going to 20K, then there's a 10x upside. So the risk reward is 1 to 9, assuming you never sell at loss. You win 9 times what you risk losing, right? Vice versa. Selling Bitcoin at 40K because you think it's going to 20 but also buying back at 60 if you realize you're wrong is a horrible risk reward, because the risk reward is 1-to-1. This means that you need to be right more than 50% of the time to make it profitable, but there is no way to win big. So mathematically, selling here is kind of stupid. You've probably already lost 50%, 50 to 70% since the top, and at best, you avoid another equal drawdown. There's no asymmetry left. You're a late seller. To make things even worse, the potential long-term upside is still massive. That being said, we're human beings with lives that cost money. The number in your portfolio tracker going up and down is real. The emotional risk reward is important, because if you lose another 50% or more, how would that impact your life? How does it change your life? Losing more money might make you a lot unhappier and stressed out relative to the extra happiness and joy wealth may bring you. Do you have stable income, or do you live off your portfolio? Do you live in your mom's basement, or do you have a family? What about your debts? Is your portfolio less than what you make in a year? Is it 10 times that? All these are the questions that you need to ask. And ultimately, you're playing a risk-reward game here. The bigger your responsibilities, the bigger your portfolio, and the less other income you have, you may want to consider selling late. It buys you safety and peace of mind. That's arguably worth a lot more than missing out on some potential gains. On the other hand, if you're young, single, have a couple of 10 to 100K sitting in your crypto, but also have a good job, it's really not worth it to start selling now. It's not life-changing money, and you'd probably be better off just buying every month than trying to win big. Because of the long-term asymmetry, if crypto wins is larger than what you risk losing, and you don't really need it anyway, it doesn't affect your life. Only lose your mind. This space could easily 100x if it succeeds, and that's pretty much the risk reward paradigm here. What we're saying is that if Bitcoin's already down, say 50%, or just under 50%. If Bitcoin continues to go down, it may hit 20,000. Possibly it may hit 20,000, but it may not hit 20,000. It may just hit 30,000. So if you sell now in an asset which is pretty much changing the world, and almost guaranteed to change the world, although there are no guarantees, the risk, the potential of Bitcoin and Ethereum and other smart contract blockchains and good blockchain applications disrupting the world is huge. And if they do disrupt the world, well, then we're all getting 100 times our money or 10 times our money. But if you sell now, you're selling to save, to potentially not lose another $10,000 in Bitcoin if everything goes pear-shaped, So you got to take a risk-reward analysis and say, is it really worth selling now after a 50% correction? If your intention is to hold it for a multi-year cycle and you're investing in good protocols, is this really the best time to trade? Is there a good risk-return trade-off to actually selling now? And the answer is probably no. The answer is probably no. The answer is probably that it's not a great time to be selling. It probably would have been a great time to be selling near the top. But the thing is, you never know when the top is, because tops don't look like tops and bottoms don't look like bottoms. And that is usually when the market turns. I want to remind you that the last time that the market bottomed, I'm going to show you on a chart when the market bottomed. So when we look at the market bottom here, the market bottomed on the days when the world was being shut down for a pandemic. That didn't seem like a logical place for the market to bottom. When the world was being shut down, the entire world was being locked down and governments had no idea what they were going to do, that is when the market bottomed. That would have been probably, at the time, I remember, it felt like probably the least likely time for the market to bottom would have been when governments were shutting down the economies and we had no plan in sight for when money would start hitting the economies again. That is when markets bottom, and that's the problem. You never know when the bottom's going to come, and every time that you do think that it's the bottom, it's usually not the bottom. In fact, that's the problem. Market bottoms never feel like market bottoms, and market tops never feel like market tops. And if they did, that's when everyone would be selling. And so people get caught off guard, and that's why the smart investors take a much longer term approach. The smart investors look at the market and they say, you know, I don't really care what happens in Russia or Ukraine. I don't. Because what happens in Russia and Ukraine probably won't have an effect on the world and how blockchain technology will affect the world for longer than a couple of months. And if the war continues for a year or two, then maybe the impact of the Russia-Ukraine will impact the markets for a year or two. But we're not in blockchain for the next year or two, because if you are in blockchain for the next year or two, then effectively you fall into the asset class of the tourists. Okay, so you fall into the asset class of the tourists. So if you are here for the short term, you really are riding short-term cycles. If you're here for the long term, then what you are thinking right now is you're thinking to yourself, the crypto market is in a weird spot. It's acting like a risk asset, going up and down on tightening fears, while governments around the world act as massive billboards for why it is that decentralization actually matters. So for as long as governments continue to do what governments are doing, that is why we're in blockchain. And the fact that Russia is invading Ukraine, or that interest rates are going up by 0.25, 10 times this year, or 9 times this year, whatever the new narrative is, isn't changing why we're here. We're here for a mission. We're here for a mission. We are here because we don't like the way that governments are reacting. We know we need decentralized currency. We know we need decentralized applications. We know we need decentralized blockchains. When we see things like the GoFundMe in Canada, when we see the things that happen around the GoFundMe, when we see governments talking, the White House now recommending that Spotify censor Joe Rogan more. The White House is recommending that Spotify censor Joe Rogan even more than he is already being censored. Well, when we see that, and when we see Twitter and YouTube suspending people like Dr. Robert Malone, we realize that this is not actually about the next 3 months or 6 months and quantitative easing or quantitative tightening. It's not about that. This is a much bigger, we're here for a different purpose. We're here because blockchain technology is going to change the world. And we're seeing it happen under our eyes. And what we are seeing now is we are seeing a little bit of a bear cycle. And Chris Burniske says, and he's probably right, he was here with us in the last bear cycle too. He says, it seems too good to be true, but odds are crypto is getting another opportunity similar to 2018 and 2019, although I don't think he's right, where money-hungry newcomers lose conviction. Quality is going to get oversold. So quality projects are going to get oversold, and the builders will be the beasts in the quiet. So yeah, he says, I've been bearish for months. The comments have turned from ridicule to we get it or silence. Essentially what he's saying is, he's saying, look, we may get an opportunity to shake out all the bad projects and all the bad money and all the bad people. And remember that the paper hands bring in the paper hands projects. The paper hands who come here for the quick returns start funding projects with no real technology, no real due diligence, and they do this, and ultimately we get bad projects into the space. And that's why Vitalik said that he actually welcomes the return of a crypto winter. He actually welcomes the return of a crypto winter. And the too long don't read in this article is he's saying, look, in crypto winters, we separate the good projects from the bad projects, because the money that is left in a crypto winter, the money that is funding projects in a crypto winter, is smart money, because that is the money that continues to invest in the winter. And the smart money is not going to put their projects, their money into dumb projects. The dumb money puts money into dumb projects. The smart money puts money into smart projects. That's the difference between the dumb money and the smart money. And what we were getting is we were getting to a point where the market was overheated. People were just throwing money at any kind of project. Bad projects had the incentive to come onto the market, and ultimately that destroys the space. Now we're getting this cool off, and now the dumb money doesn't want to invest anymore. But that's the dumb money. That's the dumb money. The smart money is saying something completely different. The smart money is saying that they want to put more money. If you look at the data shows that the Bitcoin held by funds, look at the increase in the month of Feb for Bitcoin that is being held by funds. So Feb was a good month because funds were investing more money into Bitcoin. Cool. Let's look at where else the smart money is going. 2021 showing investment in equity funding for blockchain companies. Okay, so $25 billion was invested in 2021, and in 2020 only $3 billion was invested. So in 2021 we had a 9x upside or just under 8.5x upside from 2020. Interesting. In the first month of 2022, or call it month and a half, or actually call it a month because most people were on vacation. In the first month of 2022, we have already had 25% of the entire 2021 year. So the smart money isn't stopping investing in crypto projects. The smart money says, great, now in the bear market, we're getting the same deal that we would have paid X for. We're getting it way cheaper. All the easy, the guys that came here to make easy money with copied white papers and copied presentation decks and no projects, now can't raise any money from. And so what's left is the good quality projects and the smart money. That's the bottom line. And you can see it on every statistic. I can bore you with hundreds of statistics. I can show you how institutional Bitcoin adoption is coming because the number of SEC filings mentioning Bitcoin is continuing to go up. I can show you all of these different cycles. Ultimately, the smart money is continuing to buy Bitcoin. And if you zoom out and you look at it, you realize that now the markets are completely oversold. And maybe we haven't hit exactly the bottom. Maybe it's not the bottom, but if you look at the top 50 metrics that value Bitcoin, all of them, or not all of them, but the majority of them are saying Bitcoin is completely undervalued or good value. And very few of them are saying that it's average value, and none of them are saying that it's bad value. So that if you look at all these ratios, and in this tweet, you've got every single ratio. I mean, I haven't seen such a concise list of signals that you'd be looking for. If you want to read the whole list, go to BinkiePonderosa. BinkiePonderosa. You love Binkie. Friend of yours, Fred? Favorite account. So just look at it. Shows all the indicators that Bitcoin is on. Shows all the indicators that Bitcoin is on. So again, I think that right now, if you're selling, then you're making a big mistake, because I think that the risk return of selling right now is not worth it. I think that the upside just is much bigger than the downside. If you are investing in quality, if you're investing in shit, get out of the shit, put your shit into quality, and just chill. Just chill. Do nothing. Go on vacation. Just leave your portfolio. I showed you this earlier on. I said to you guys that I'm going to show you guys how I'm trading my way out of a portfolio that's now 45% down, 50% down. I've invested in a whole lot of tokens. I'm leaving them. And now I'm going to sit back. I've got no more money to invest. I've got like 5% of the portfolio left to invest, which I'm looking for a great opportunity. And I think I found one. I might put some money into it. I'm just waiting for it to come down a little bit more, and I'll show you what that is. But otherwise, I've invested in stuff that I think is going to survive any bear cycle, whether it's a 2-month bear cycle or a 10-month bear cycle. And now I'm chilling. I'm relaxing. Got nothing to worry about. Fred, on the other hand, is buying pudgy penguins, getting airdropped fishing rods, buying pudgy penguins and getting airdropped fishing rods.
And I'm also racing horses. About that.
Tell us about your portfolio, Fred. Tell us about your horses.
Budweiser.
I've got Studweiser. I've got Diamond Hooves. I think I've got about 50 horses now. Yep, they're making me money. Not making me as much money as they were a couple of weeks ago. I might have been a top signal. Don't think I was. That's my story. Thanks.
I don't think he was the top signal.
Hustle, bro.
I think that there was an
You know the
event.
drill.
I told you. I said this on the show. I said temporarily after the Valentine's event, prices of the horses went up for like 2 days, and then Vis has really crashed. It was like a sell the news event almost, that breeding event, Fred. A lot of people stacked up the Vis tokens and might have missed out, so they sold their tokens. Just wait it out. I think we're going through some fluctuations here. We've seen it in the past. You're not the top signal, Freddie. You're good. You're muted, Ran.
Fred just muted me. Did you have any tokens stolen in the OpenSea hack?
No, luckily for me, no, I didn't. Most of my stuff's on hardware wallet.
Amazing. Well, we're going to quickly talk about the OpenSea hack. Then we'll talk about what's happening on the gaming show later today. So what happened to OpenSea? Well, it does feel like OpenSea is riddled with issues, but it actually wasn't an OpenSea issue. From the information that we have right now, it does feel like the affected accounts in this OpenSea hack, which wasn't actually an OpenSea hack, there were, I think, 32 accounts that were compromised. and those 32 accounts had, I think, about $200 million worth of NFT stolen. Was it $200 million worth of NFT stolen from them? Yeah. It was quite a very smart. It was a very, very, very smart attack. It was a very, very smart attack. The hacker effectively, not to get too technical, but deployed a smart contract previously, and through a malicious phishing attack or a malicious phishing mail, managed to get people to sign a whole lot of transactions. Now, because he then had the signed transaction, he had the signatures, and then he used the signatures to clean out all the accounts basically at once. And he effectively sold, were you guys involved in this? He effectively sold a whole lot of those tokens as soon as it happened, and he's holding onto a whole lot of those tokens right now. There's a few things we should look at when we talk about this OpenSea attack. So technically it was a very smart event, and it just shows the importance of not responding to phishing emails and not approving any contract on your MetaMask wallet. So you've got to make sure that if you're approving something on your MetaMask wallet, you've got to make sure that you know exactly what you're approving, or that you trust the site that you're approving. Because once you approve a smart contract to talk to your MetaMask wallet, effectively you're giving a contract access to access your NFTs, and that's exactly what happened. Now, the smart contract, the hacker stole a whole lot of the NFTs. Here is a whole list of the NFTs that were stolen. There's a much more comprehensive list, and I think it brings up for discussion about the value of stolen NFTs. Like, are stolen NFTs actually worth anything? What is the value of a stolen NFT? Like, I understand the value of stolen art. You take stolen art, you put it up in your bedroom, people come and visit you, great, they see that you've got stolen art in the bedroom, amazing. But with stolen NFTs, the NFT, you're not buying for the beauty of the art. You're not buying it for the beauty of the art. You're buying it because it's like exposure into a club. And if everybody knows that the NFT that you hold, that your account holds, is a stolen NFT, well, I'm not sure that you're welcome into these clubs. So I've yet to see what happens to stolen NFTs and what stolen NFTs are actually worth something. In fact, let's get a Hustle on this. Hustle, what's a stolen NFT worth? Like, what's it, other than a yield generating NFT, like a peg axie, which, you know, you got a stolen peg axie, you can still run all the races. What's the point of stealing someone's punk or someone's penguin or someone's Bored Ape?
Straightforward. There's a lot of liquidity, surprisingly, in those projects. Even though like CryptoPunks and Bored Apes are expensive, there's a lot of liquidity in those projects. You could either flip them really quickly for profit. You could hold. I mean, you could. There's so many variations of things you could do with NFTs. To be honest, you know, you can send them off to a cold wallet where they'll just never be touched again. No one can ever extract them. But the risk you do run here, if you leave them as an NFT, if you leave them in your wallet, there is a possibility. Potentially, you know, down the line where there will be those security methods where if something gets extracted from your wallet, they can actually freeze the asset. So,
but I mean, Hustle, if I own a punk or if I own a Bored Ape, I'm not buying it because it's good art. I'm buying it because because I'm part of this club. I'm part of this club of people that own Ether rocks or punks or apes or whatever else it is, right? I get no yield out of this shit. Right. Okay. So if I don't manage to sell it before anyone knows that it's stolen, then effectively, just by putting up a simple notice board, you can say, hey, this is a list of the stolen rocks. If you are buying this rock, you're buying stolen property, and everybody knows that that's stolen rocks. That's it.
There's a couple Bored Apes that have been stolen, and they do actually get marked by OpenSea, like notice this is a compromised Bored Ape, and usually those don't end up selling again. Yeah.
So I don't get it. I mean, I don't get it. Look, there has been an article on the website. Go and check it out. I haven't read the article yet, to be honest. Fred wrote it. Quite interesting. Actually, Fred didn't write it. Somebody wrote it. It wasn't Fred. But go and check it out. I'm actually super interested to go and read this article because I want to understand the value of a stolen NFT. I don't really understand the value of a stolen NFT. I get stolen art, kind of. In fact, you know, I don't know how many people know this, but the Mona Lisa actually only gained its value because it was stolen and went missing for 2 years. That's how the Mona Lisa gained its value. But I mean, I don't know. You want to steal Bitcoin, steal Ethereum because, you know.
I just don't see it's like publicly visible. How?
Yeah, it's publicly visible. Everyone knows where it is.
How would a secondary market absorb that.
Everyone knows where it is. I mean, that's the part that I don't understand. Everyone knows which apes were stolen, which penguins were stolen, I mean, there's a whole list. There's a whole list of all
It's
of
all
this.
on chain. It's all on chain.
It's all on chain, and we know where it is. It's not like, in the old days, you steal a painting, you hide it in your bathroom. No one knows it's hidden in your bathroom. But here, everyone knows exactly where it's hidden. It's hidden on this address. End of story. It moves again. And we know what it looks like, and we know what color it is.
Yeah.
I don't know. Sounds dumb to me to steal art, to steal digital art. Steal something else. Don't steal digital art. Everyone will catch you. Everyone knows. It's not like stealing Bitcoin, where, I mean, ultimately, if you buy a stolen Bitcoin, like one of the Bitfinex Bitcoins, that, I mean, you can claim, look, I bought a Bitcoin. I never knew it was stolen. It was a Bitcoin. Bitcoin is Bitcoin. But yeah, I mean, that's the punk. That's the ape. That's the penguin. That's the Pegaxi. That's the one that was stolen. Anyway, let's talk about the gaming show. What's on today?
Yeah. It should be a good one. We got some headlines to cover, such as Sony getting involved in the metaverse alongside one of the biggest English Premier League clubs. So that'll be interesting to talk about.
Manchester City.
Yeah, Manchester City. You're right. Come on, man.
They lost to Tottenham on the weekend. Ouch. 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 Ouch.
Yeah, but that's not the point. Big partnerships and the fact that the EPL stepping into the metaverse is good to see. We have some other news bits as well. I know a lot of people here, such as Freddie, are racing those horses. And there's a big economy change coming up where they're actually going to twist some of the meta and the best horses to get and stuff like that. So I'll go over all the economy changes for all the Pegaxi racers out there so we can keep our stables highly profitable.
Hazel, weren't you supposed to move apartment?
Tuesdays is the last. Tomorrow I'll be all moved in.
Amazing.
I have been moving the last couple of days. I just don't have a moving truck to get like my desk, my couch, stuff like that. So we kept the setup here till Tuesday.
Amazing. Yeah, I'll see you later on your show, buddy. See you a bit later.
Sounds good, Rand.
Alrighty, make sure that you catch the gaming show later. Also, remember, if you want to support this channel, easy. Just sign up for KuCoin down below, sign up for Bybit down below. Join any of our affiliates. That's how we support the channel. 65 of us working here to bring you free content. And we're transparent about how we make money. We make money by referrals, and all the referral agreements, all the referral codes are underneath. Join one of our services. I've particularly taken a liking now to this service, which is the CoinStats. The reason is it does let me see my whole portfolio. Or maybe now I'm not so happy because my whole portfolio looks like shit. But it does make me see my whole portfolio. It's very easy to use. But you've also got, like, I'm looking at my MetaMask and I'm looking at the KuCoin account, and I can add the Binance account, so I can see all my holdings in one place. So I can see my whole portfolio in one place. Cost you 10 cents a day, like 10 cents a day. Cheapest chips. All right, guys, we'll see you guys again tomorrow. Until then, trade well, my friend. Okay, scan this QR code. If you do, you get a chance to win one full Bitcoin, one lucky KuCoin account holder. With our referral link, we'll win a full Bitcoin, which was valued at $64,000 and now is only valued at $37,000. Can you believe it? Hate bear markets. See you guys again tomorrow.
Back bear markets.